Elecon, the company reported a more or less stable set of numbers. To talk more about that, we have Mr. Patel, the CMD of the company. Hi, Mr. Patel. Thanks so much, sir, for joining in. Last year, well, it was more or less a flattish sort of year. I think on the top line, you've done close to around 1,280 crores or thereabouts. You've indicated that your order book is pretty good. Things will start looking up. For FY18, what kind of a revenue number can you give us? And also in terms of margins, in the last quarter, you've done roughly around 20%. Hold on to these levels, improve from here?
Yes, this particular year looks much better than last year. We've got a very healthy order booking starting from April onwards, and we see a change of wind coming in with lots of improvements. So we are very positive about this year. We believe that we should be increasing our top line by at least 15 to 20% if things continue to be positive the way they are. And the bottom line would also improve accordingly.
What about margins, sir?
Yes, the margins would definitely improve.
Okay. So what has changed from last year to this year, which makes you more confident? And, you know, where are these orders coming in from?
The orders are coming in from the sugar industry, from the infrastructure building, which is roads and highways, and also from power sector.
All right, Mr. Patel, your transmission business, if I take a look at it in the last year, on the top line, there was a bit of a degrowth. It did around 814 crores by the time we wound up for the year. And even in terms of the operational performance was a little weaker. Now that 15-20% that you're guiding in terms of a total revenue top line growth, how much of it is going to come in from this transmission equipment segment, and will margins improve here as well?
Yes, as I told you, that we've got some very healthy orders this year coming in from April onwards, and we see a boost which is coming in. Boost in the economy, we are feeling it, and we believe that if things continue the same way, the year ending would be far better than what it was, which ended.
Okay. Could you quantify the increase in order inflows that we've seen since April? For instance, if you could tell us the expected order inflows in this April to June quarter, and would that be the quarterly run rate going ahead, and how would it compare with a year ago? Can you put some numbers to it?
We have seen almost a 30 to 40% jump in the first 2 months.
Okay.
And which is giving us the positive indication that even if it slightly tapers down, we would at least see a 15 to 20% increase.
All right, Mr. Patel, how is your balance sheet looking? I think last year your total finance cost was around 80 crores for the entire of last year. So what's the current debt on your books, if you could help us out with that number?
Or since I don't have the figures handy, what I could tell you is that our debt has reduced by about 100 crores.
Okay.
So that is a positive sign. And going forward, we have plans to further reduce the debt.
All right.
And how will you reduce the debt, sir, further?
There are various options that we have. We are exploring them. But we have definite plans and a strategy which would get defined to reduce the debt.
Mr. Patel, you're saying that your debt has come down by 100 crores, but your finance cost for the last year went up actually from around 75 crores to around 79 crores. What's your borrowing cost? Did your borrowing cost go up, or why did your finance cost go up? Because if I just try to extrapolate that, but you're saying your debt has come down by 100 crores, it doesn't appear the same because your outgo is going higher.
That is true. The cost had increased. Oh. However, this year it would show a decline because this has happened in the last quarter only.
Okay. Thank you, Mr. Patel.